Welcome to Understanding Private Companies. Companies are a structure that some people use to run a business, hold assets, or act as a trustee. A company is considered a separate legal entity, that is, it is not an extension of its directors or shareholders, but could be considered a whole other person. Because a company is a separate entity, it needs its own identification numbers such as tax file number, Australian Business Number or ABN, and GST registrations. It will also need to lodge separate returns from individuals. ASIC is the government body that regulates companies. A company structure provides a separation of business assets and risk from personal assets such as the family home. As such, if set up with care and consideration, it offers asset protection advantages not able to be gained by operating as a sole trader. Companies pay a flat rate of tax which is currently 30%. So compared to the maximum personal tax rate of 45% plus Medicare levy, there can be some good advantages in operating through a company. A company's operations are controlled by its directors and the company is owned by its shareholders. As discussed previously, a company provides some asset protection, but in some cases directors can still be held liable for their actions, and in some cases the debts of the company also. It's therefore important that as a director, you know and understand your responsibilities. The law expects directors to be honest in all their dealings at all times, know what their company is doing, make sure that your company can pay its debts on time, ensure the company keeps proper financial records, and acts in the company's best interests even if that isn't in your own interest. So therefore, you need to find out and assess how any proposed actions will affect your company's business performance, get external professional advice so that you make informed decisions, question managers and staff so that you know how the business is going, and take an active role in directors' meetings. Directors are personally responsible for keeping proper company records, so you need to ensure that the company keeps records and can explain its transactions. Ensure that you can explain the company's financial position and performance. Some of the basic financial records you may require are a general ledger recording all transactions and balances, cash records, bank statements and cheque butts, debtors and sales records, creditors and purchase records, wages and superannuation records, registers of property, plant and equipment, inventory records, investment records such as contract notes, dividend notices and certificates, tax returns, deed contracts and agreements. A lot of electronic accounting software will provide a lot of those financial records for you. Every company also has to maintain a company register. Inside that register, there's a register of members, a register of option holders, minutes of general meetings, a register of charges and financial records. You also need to designate a registered office, which is where the company register is held, and let ASIC know if there's any changes to office holders, shareholders, addresses, etc. And every year you'll get an annual renewal fee from ASIC, which pays for its governing of companies. You'd also need to pass a solvency resolution every year. So this is basically saying that the company can pay all of its debts as and when they fall due. If a company can't pay its debts, it's said to be insolvent, and this can lead to criminal prosecution, fines, or liquidation so that creditors can recover amounts lost. In a lot of cases, many of our clients request that we act as their registered office as well as agent with ASIC. This means that we ensure that all the required documents are created, signed, and maintained. Shareholders are the main role in a company as well. The shareholders are the owners of the company. They are people, other companies or trusts that have purchased share capital. They are generally only exposed to risk to the amount of capital contributed. A shareholder receives a return on investment in two different ways. First, they may receive dividends as and when they are declared by the directors. Many companies carry different types of shares that give access to differing rights. For example, some shares might have voting rights whilst others don't. Some shares might have access to dividends and others not. Directors might declare dividends to a special class share and not others, so you should review your class share rights before issues. Generally, private companies are set up with only ordinary shares being issued. However, there may be a case for issuing specific classes of shares. The second way shareholders receive a return on investment is by selling their shares. This could happen when a party to the business exits by selling their shares to another party. Generally, these transactions take place at market value. Some company rules have conditions around who you can and can't sell shares to and how they are valued at sale. Again, it is a good idea to ensure these rules meet your requirements before purchasing shares, or establish a shareholders agreement that will detail how the company is to be operated, who is responsible for what daily tasks, and how shareholders exit and enter the business. People often have questions about how they fit into the company structure and what it means for them personally. Firstly, if you are the main person in business, you will likely take on a director role. You will also likely hold shares in the company either directly or through another entity that you control. If you work in the business, the company can employ you just as they would any other employee. This also means that all employee obligations also apply to you, such as pay-as-you-go withholding, superannuation, annual leave, and fringe benefits tax, etc. So how can you gain access to money your company has earned through its business? You can either draw a wage, pay a dividend to shareholders, of which you are most likely one, but perhaps the most asked question is, can I borrow money from the business? The short answer is yes, but of course there are conditions. Like any loan, you would be required to repay the loan over a specified period of time, often 7 years, with an interest rate set by the ATO each year. This rule is in place as in the past people had a tendency to borrow monies from a company they controlled with no intention of ever repaying the debt. As a consequence, they had use of money for personal enjoyment that they hadn't paid tax on personally. So we suggest to people that if you're going to take money out of your company, be prepared to pay tax on it in your personal name. As with any business decision, it is important that you seek personal advice for your specific needs. Taxation laws intertwine with company laws and other legislation in Australia, so it's important that proper care and attention is given to who will hold what roles. It's not always about saving tax. Sometimes protecting your assets is a greater consideration. Some of the areas you should ensure you and your advisor have given thought to are implications of personal services income rules. These can require companies to treat some income and deductions differently. Getting the right people in the right roles, directors, shareholders, share classes issued. Whilst all of these items can be changed, there can be ramifications to changes at a later date, such as additional tax. If you are in business with a non-related party, you want to make sure that the structure suits both your needs and that partners can enter and exit the business appropriately, as well as receive just remuneration for the work they do in the business. Again, a shareholders agreement is highly recommended. Finally, you need to consider how capital gains tax might impact your future plans in the business. Whether this is realising an asset that the company owns, for example, selling a property purchased by the company, or selling your shares in the company. If you'd like to discuss your personal situation with one of our trained staff, please contact our office on 07 41 51 8898.